The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, noon till 1 p.m., Monday through Friday. Love to get your calls at 877-927-6648. Let's get to the nitty-gritties. The Dow is down 83 at 20. Let me do them one at a time. First of all, I've got the futures here. The futures are down 12 at a leg D in the Chapman Wave methodology. The last peak D that was made on the 29th of January at 28.83 saw that very sharp decline. This is the June contract, all the way down to 25.32. Now we've got a leg D again. The MACD is good. The stochastic is under, well, it's just on 80%. We're going to be watching this very closely. In the 120-minute chart, I was asked if I'd go through that. 120-minute chart made a peak G/C in my work with a Chapman Wave instant restart activated. And this is the reason. This chart right here. Oh, I hope we don't lose power. We've got a huge storm going on right now. This chart is exactly the reason how I developed in the Chapman Wave methodology my instant restart technique at a peak D. Within 3 bars, you've got to go to a new recovery high. That gives you an E/A. Then you use an alternate count. Very often you go to a G. The technicals fail, but the price holds very well, and it makes a kind of a cup formation, and then finally gets to the D. I could never understand it because in my work, I would have said, well, that's your G. That's fine. I'd learned how to get to a G in the Chapman Wave methodology. How did I explain that as an A or maybe even a B, and then it fails? And failing at a high without going to a D is really unusual. So within this context, we get to the D, and the rule of thumb is in this cup formation. I call it the drop bucket formation. If there is a pullback 25 to 35% below the left side lip, that high, there's a good chance you're going to retest the low of the cup. If you take out the cup, there's a 1-to-1 chance that you're going to go 1-to-1 at least to the downside, which is exactly what we're doing right now. Not quite there yet at 27.76. Enough with that. Let's get out of this. A lot to talk about today. I considered that, I said to my subscribers to my opening call, caution. We now have far fewer longs, and we are looking at the short side, and we added to the short side. There was a reason for that. Let me go through this very slowly. So the E-mini is now down 12, down 13. The Dow at this particular point is down 101. Well, it's changing as we speak. 95, 93, down very sharply. You remember yesterday I spoke about this, and I had a question about my Chapman Wave Roman candle. You spoke a lot about the Roman candle. Are we going down, And all I said is, it's just like a 200-period moving average. It's just like anything else. You keep it there, and only when you need to focus on it, like the 9-period moving average of the Dow monthly at 23,974, you don't even need to look at it. It's there as a warning. It's another icon that says if, in my case, 24,200, 300 to 200 support is taken out, watch out below, because then you're going to probably test the low. That's the rule of thumb. I'd also said that there's a downtrend line that has repelled the price for a little while now, and we did it again today. The Dow ran all the way up to can you believe it? It went to 25,376. It's trading right now at 25,090. It actually went lower than that. Hit the 9-period moving average. So these are warning signs. These are guideposts. These are the development over many decades of different techniques. And what I'm really looking at is If there is a Dow close under the 9-period moving average, around about 25,042 right now, if there is a close below that, and I had to say at about 24,950s, if there is a close under that this week, that's just not a good sign. Then the weekly arch formation, the lowercase h, is going to kick in. On the upside, if there's by Friday, hey, the week is young, we're only on Tuesday. If there is a close above 25,500, I have to consider that the sideways trading band is going to expand, and it will probably go up towards the 26,000. Try to keep it as simple as possible. This trend line support here, looking out a couple of days, is at 24,620. This dashed triangle pennant flag type formation. All right, S&P, SPX.X. The S&P right now has gone to a leg D. The Dow's failed to get to the D. Dow's been the weakest because it's got the cyclicals, and the cyclicals are being really hammered by the implications of what's going on internationally. But at the same time, we need to get to the high techs, and we'll talk about that in a moment. So the S&P is down 10 at 2772. So the Dow is down 0.31. The S&P is down 0.37. We're going to get to the Qs in a moment. The QQQ series, if I can see it from here, seems to get further and further away. QQQ is trading at, it's down 1, just over 1%. We'll talk about that in a moment. So the S&P, the numbers to watch, if the S&P is at 2772 right now, if it takes out today's high, that's really very positive action. Sure, positive within a range, but still positive. But if it takes out in the next 3 days, it goes under 2750, the 9-period moving average, that's very, and if it gaps down from there, that'll be an island reversal. So we've got to be watching this very closely. Let's get to the QQQs because it's so important. The QQQ hit 175.21. It opened at 174.80. It's down $1.91 at 172.16. The weekly chart, as I said to subscribers, I had a whole thing on the Qs this morning. We've actually taken a position in the Qs, first position we've had in a long time. And the position states that if this V-shaped pattern in the weekly chart with a good MACD and the stochastic at 84% good, but the relative strength is not so good, and a peak E formed in the 120-minute chart, if this key indicator, the PowerShares QQQ Trust Series, if it closes under 170 at any point in the next few days, I have to suggest very strongly that the Qs have made some kind of a top here that might not just be a near-term 5-day, 1-week thing. It might be a little longer than that. So we have to watch that. To put it into perspective, let's look at the SMH. I always look at the SMH because it's got such important stocks. The SMH is this market vector semiconductor ETF is at 112. It made a high today, an all-time high of 114.55. And this is a leg D. There are so many leg Ds and Es, especially Ds, in this particular phase. I have to consider that we are really close to some kind of a consolidation. And I'll talk about that as soon as we get back. Dow's down 84, S&P's down 10. Basil Chapman, Tiger Technicians.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So here we are. We're looking at the SMHs down 88 cents. Only a leg D. Doesn't say you've made your peak D. The stochastics at 94%. That's really good. The MACD is strong. It means that the SMHs, that something has to happen. Some news has to come out. And it has to really knock these things down. And you need to see the SMHs trading at the below 108. That's 4 points lower where it was just 4 days ago. But that's not the issue. The issue is that how it holds support is going to be key, because it really has to go under 108 for me to suggest that there's a sell signal in place. And then I still have to wait for the MACD to cross negative, stochastic to go under 80%, to go to a sell mode. This is just the daily, let alone the weekly. So we're going one step at a time. If you look at the XLK, the XLK is the S&P Select Tech Spider Fund. It's gone to a leg E, and in the daily, and it's a leg D. I've called it a leg D. It isn't one of those D/A. I'm calling it D for now. And it's technically very good. It's a little stretch if you see how far it is away in the weekly chart from the 9-period moving average. If I put some kind of a Bollinger Band or a Keltner Band, you'd find that this is at least hitting one of those moving averages. So what's really important is that the XLK has to drop. It's at 70.31. It's down 42 cents, made an all-time high of 71.34. But it has to close, really has to close at least twice underneath this 9-period moving average. I'd even say underneath the 14-period moving average of 68.80 for me to even get some kind of a signal. But it's a start. How do you get a turn in the market? You get it through the 120-minute chart. That leads to the daily leads to the weekly leads to the monthly. Sometimes it's just a 120-minute chart and a little blip in the daily, and then you're back to moving higher. So we'll have to see, go one step at a time. I think that's very important. Most important is I'd like to look at the IWM. Actually, all day I haven't looked at the IWM. Leg E after a doji. This could be a Chapman Wave silent doji. If today there's a sharp turnaround and tomorrow there's a move down and it takes out at 158.58 right now. Made a high, missed the all-time high of 144. Did I write that incorrectly? 160.63. Good grief, what did I write there? 160.63. That was the most recent high 3 months ago. And now, oh, there it is, 160.63 on the 24th of January. And now what we're looking at is this got The cup doesn't look quite, it looks more like a V-shaped pattern. Chapman Wave methodology says on the right shoulder, if you start to see technical weakness, there could be a drop bucket pattern, just as we saw in that 120-minute chart of the E-mini. So now what we're looking at is 156 to 155.5 key support in the IWM. Nothing yet. It's not even a peak E at this particular point. So what I like to do, since timing is something that I've tried to do it for decades, is to try to time turns in the market. We'll see if there's anything here other than just a little blip to say, you know, the moment you lift your hands off the steering wheel to pat yourself on the back, that's when you hit the tree. That's my expression. So now I'm looking at this and saying, hey, well, one step at a time. Let's see if we can get some traction to the downside. After just January into February, we had that very sharp pullback, 18% in the Qs. I want to go to gold. We've got a lot of questions lining up. We'll go to gold. Gold is up 5. It's at 1326. This is really fascinating. Pulls back this morning, but I'm looking at the dollar and I'm saying, you know, dollar, you had your opportunity to move up and you couldn't do it. I don't know what's going on around here. Then there's news was the PPI comes out and gold pulls back, and then suddenly it moves up, and then suddenly it pulls back, and now it's back again, up 5.6. I would suggest to you that the MACD is starting to improve, the stochastic's improving, the on-balance volume is improving. We've seen this movie before. We saw it when gold went from just over 1,300 to over 1,360, and then collapses and goes back to the 1,300 level. So I'm just suggesting to you that gold might be in a trading band, and that if you're looking at the gold stocks, you want to see the gold stocks move very well. Let's see what the GDX, the gold miners. GDX is down 4 cents at 21.72. It just is not picking up traction. I just think that it's not gold's turn yet. I think where gold gets to move is when the economic report comes out one Friday at 8:30 or whatever day, Wednesday, whatever it is, and it says we are seeing inflation, and inflation has gone up from the previous month 5 or 8%. Wow, then I think we get traction and we start to see some kind of inflation. That's when I think we see gold pick up. This is just my thinking at this particular point. Okay, I need to look at the high-grade copper. High-grade copper is it's a 3.13, stuck in a range, made the H pattern, hasn't taken out the left side low. The 3.04 level of the 200-period moving average is key support, and it's trading at 313. 314.7, 3.147 would be strong resistance. I want to go to crude oil, then we're going to look at the currencies. Crude oil is down 72 cents, making that arch formation. Yeah, that weekly chart really has me worried. Let's look at EUR USD. This is the euro dollar currency pair. It's trading right now up quite nicely off the 9-period moving average at 1.239. And what I'd said yesterday and the day before and the day before and the day before is that the euro needs to get very quickly into the 1.2450, 1.252 area, just to say I'm now making that magnet of 1.255 where the peak D was back in February. That's where I want to get back. I want to make that leg D. I think this might be the move that gives it an opportunity to make that leg D in the weekly above that 1.255 level that was made the week of the 16th of February. Monthly chart. Now this candle, thank goodness for the last 2 days, because this candle makes the 200-period moving average of 1.217 really important support. This is looking quite good, I must say. I can, for the first time, say the MACD and stochastic are coinciding with what's happening with the price. It better not break under 1.234, but at this particular point, euro-dollar currency pair is looking good. Let's look at the USD JPY. Should be moving down, and lo and behold, it is moving down, but only after being higher in leg C, and it hasn't broken down. In fact, it's still up on the day, 0.12, 106.52, and what I'd said here was the same sort of thing, that unless the yen, US dollar, Japanese yen currency pair can actually trade into the 108.30s, somewhere around there, it just needs to hold comfortably above 108, 108.30, 108.50, then I'm going to say to you, hey, yen is doing well, but at this point, It looks like the archers are in command, and there's a chance that it's going to break 106 support. Whoa, that'll not be good. I need to go to the TLT. The TLT is up 50 cents at 119.09. My contention for a long time has been, if the tradition of what I look at holds, if the market starts to really go down sharply with the futures opening lower, sharply lower, and then trying to rally and then closing towards the low of the day, and it happens consistently as the VIX, which is at 16.16, up only 38 cents, really gets into the high teens, and then there's market perceives something as a bad news cover, a dark cloud cover, then you should see money flow from equities into bonds. That's what we'll be watching. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So we are here and the market is down 60, S&P is down 7, the Dow is down 60. So let me go through this. I had a question about IYR. Well, the IBB has gone to a leg D. And it looks to me, and this is something I discuss here, every day for my subscribers, I have, where do I go here? I have in my Traders Corner, this is my daily newsletter, it's called The Opening Call, and then my final chart that I send every day is called The Traders Corner. And what I said was that the IBB, it's number 8 on my bullet points list, leg D with higher highs and higher lows, supported 112.90s. Was that today? No. Leg D, and might be an area of safety for funds. Now, we don't have a position here. We followed it quite closely every single day. I give parameters for it. The MACD and stochastic are giving a good sign, and it says that if the IBB holds the 112s over the next 2 days, fund managers could be looking at this as if to say, hey, you know, I don't quite know what to do here. I'm not buying Intel or Micron or Lam Research at these prices. Let me look at something that's really been showing some relative strength in relation to where charts have been over the recent 3 months. And that puts this in the place of saying, well, it's always a little dangerous to go into the biotechs, but actually they've been holding pretty darn well, okay? But wait a minute, look at the IYR. And I discussed, the question was asked of me a couple of days ago, and I said, yes, holding very nicely. Every day, even today, is making a very steady, since the low that was made on the 2nd of March in the IYR, the iShares Dow Jones US REITs Index Trust. These are commercial real REITs properties. At 72.26 on that day, which was higher than the low that was made in February, where you got your peak A and peak B, it broke out to leg C by going 1, 2, 3, 4, 5, 6. This is the 7th consecutive day of higher highs. So this is a floating ladder. It only makes a peak if tomorrow there's no higher than today's high. Say today's high of 76.41 is not pierced by the day's end, then that makes a peak, even if it's by 1 penny. 76.41, maybe tomorrow's high is 76.40, that makes a peak. The next day could be a higher high. Doesn't matter, that was a peak in the Chapman Wave methodology. And this is leg B in the weekly chart. So it's saying to me, this is something to look at. Now, I've been asked a lot of times about XOM. I got asked again today about XOM. Now, a lot of people have had it in portfolios for years and years and years. And I've been suggesting over the period of maybe the last few months that if anyone's nervous about the XOM, the ExxonMobil position, if you've had it for years, don't go. I wouldn't get carried away and sell everything now and then have to find something. I've been suggesting take the dividends and put the dividends into something else. If you have to live on the dividend, that's a little different. But if a dividend is something you reinvest, why not reinvest it in other areas or keep it as a cash position and say, you know what, next time X, or no, I don't want to use the word X because I was asked about X. The next time a particular stock that you just love really just takes a pounding, have patience, and then buy it. If it's trading at 35 right now, and you can get it at 27.50, even if it goes down more after that, you're not paying the 35, you're paying the 20. You've got yourself an 18% or something discount already from what you would have paid. So that's the way I would utilize that money. If you're nervous about, now, what I had also said to a couple of people actually that asked me about Exxon and have had it for years and years and years, or had inherited it, I said, you know what, why don't you slowly take some of it out? Look at the pressure on the multinationals. You've got natural gas, you've got so many areas of energy being produced. You've got batteries, you got so much going on. I wouldn't be surprised if the high that we saw in Exxon, except for some exogenous event, 104.76 is trading at 74. It has to go up 30 points. I wouldn't be surprised if it's going to be real tough for Exxon to get above the 94 to 96 area if there's really good news for it over the coming weeks. I'm looking more like it's going to keep testing lower lows and lower highs. There's just too much competition. So that's what I'm saying about Exxon. Now, when we're looking at the question I got was in terms of, could I look at American Express? American Express trading right now down $1.92, made a peak E in the Chapman Wave methodology back in the weekly chart. That was in the beginning of the year. Yeah, week of January the 19th. Goes to 102.39, plummets down below 88, and now it's trading at 95 after reaching 102. So it's saying to me, be careful. There could be one of those arch formations, double top formation, right shoulder failure. But what's really fascinating, no matter how I count this, I get only a peak C in the monthly chart. So I would put the American Express, MasterCard, this isn't a leg E, somewhat extended, leg D in the daily, Visa. I put them in a little package, and I'd constantly look at them and say, MasterCard has been the best, but it is extended in the monthly chart. Visa is the next one, and it's got a peak D in the monthly chart, but it's held very nicely. And American Express hasn't rated as well as the others to its all-time high that it made this year, but it's something to keep in mind. So MasterCard is the better one, technically. Visa's next, American Express follows. However, American Express only has a peak C, and the others are a little bit more mature. So I wouldn't be buying any of these right now, but these are the ones to be looking at. Let's see what happens. Let's see if this wick gets filled in American Express with 87.54, the low of last month. Meantime, I think the upside is a little bit limited. Okay, now I said I'd go to the, did I do this? Yeah, the yields. So we're looking at the weekly chart, peak C 32.21 in the 30-year, 3.221. I don't think that's going to be taken out for a little while because I think that yields are going to pull back. If I'm correct in thinking that this market is ready for a timeout, even if it doesn't have to be deep, and money starts to flow into the bonds because of the so-called safety factor, watch this closely because the 10-year TNX is at 2.854, and it's made a peak D. This is the third week that it's below that high, same as the Dow, and same as the Dow, same as the 30-year at a peak C, and that says it should go to a D. That's the reason why I'm saying yields should go higher. But now look at the way the 5-year is holding. Look at this, it's making a cluster formation here. Normally I would just grab it and put in an oval. This oval is going to have a color attached to it. I don't really like that. So let me see if I can make a change. I'll keep the oval. Let's fill the color. Let's fill with red. No, that was wrong. I filled in the wrong thing. Fill the color. Fill it. Let's make it fill the color. Fill the color. There you are. Okay, so we fill that color. So that's one of those stork leg formations. We've been watching this closely. All right, so I wanted to go through those. I also want to quickly, as we go to the break, I'll show you wood is made a new high this week. Now it's pulling back a bit, and the home builders are rallying a little bit. I'll be back. Basil Chapman, oh, only about 16. Oh, what a free market. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, AVH, what is that? Question AVH. AVH, where did I type that? Did I type in the wrong place? AVH. At 9.06, only up 0.05 after being higher, much higher earlier. This is Aviance Holdings SA. This is a mining, I'm not sure what this is. But whatever it is, A, B, C in the weekly chart. You know, I kind of like it, but I like it more as a swing chart. Oh, it's an airline. Aviance Holdings. Aviance Holdings. It's at 9.06, and I would, Latin American Airlines, I'm just saying to you, it's hugging the 200-period moving average in the weekly chart of 8.86. So what I'm going to say to you is, have a little patience, hold off. Let's see. Yeah, you've missed it if it goes back to 946 or something like that. But at 906, I try to have a little patience. If you can get it in the 8.90 area and have a fairly tight stop, I'd much prefer that. But I actually would prefer to say, hold off on the airline, anything airlines related, maybe 3 days. I think it's time more than price. So all I'm going to say is it looks very nice in the weekly chart. Monthly is improving. Daily chart looks very choppy. This kind of pattern says it could stay around here for at least 3 to another 7 sessions. So just hold off. You might miss it, but I'd much rather not be buying it in the 9s when if it takes out the low of 8.57, I think it can go all the way back to 8.20. Those are big percentage terms. I don't see the risk reward. Next question I had was Boeing. So my mistake, folks, for my subscribers, we had shorted Boeing at 353 just after the top that was made at 371 because it dropped so sharply. I waited for the bounce. Then it pulled back very sharply. And overnight, it went down to 337. That's a pretty big profit. Didn't get a chance to take it. I still decided to keep it. And we got stopped out. I probably could have held it because the initial stop wouldn't have been taken out. I just didn't want to mess with it. I just really didn't want to mess. 356.01 was the stop initially. So we got out at break even. And yesterday I said, let's just wait a day. Well, that was the day that it suddenly tanked, and today it's following through. So Boeing is this whole cyclical area, and it's saying, watch out, because at 335.30, if that is taken out, it's probably going to test 317, the low of the week of the 9th of February. That's the one hand. On the other hand, if together with Raytheon, which is right now a little bit weak, under the 9-period moving average, with that H pattern about take out the left side low, if you've got the defense area, the PPA starting to move down, that says until the talks, the North Korean talks come about, we might see these things finally. It's the only way that they're going to have a rest, and they might have a well-deserved rest. Let's hope so. So I hope I answered that. Yeah, UTX, Pratt & Whitney. So here's a question. It's down 34 cents. Yeah, I'm a little worried about UTX's shorter term, same as Triple M. My Dow Quartet, just not going anywhere. GE is still very weak, down to 65 cents. Not good at all. IBM made a leg D. I don't know if it's made a peak D yet. Leg D. Oh, there's that leg D and about to pull back. Yeah, just be real careful. Next question was Indu. Ooh, that lightning came about. My computer just went on and off. Dow, is there a big plus 500 Indu rally coming on Friday or into Friday? Again, that's with the jobs number. A 500-point rally. You know, let's just go back. I can see a 250-point rally to go to that leg D above 25,800. You'd have to break decisively above this downtrend line first, or the way we see it these days, it just gaps up. You know, it's a really good question. 500 points. There's just a lot of buying. Look, even now the Dow's now back up, and the S&P's down. This is interesting. Now you got a reversal. Something's happened within the Dow to have the Dow stronger than the S&P. Yesterday the S&P and the day before S&P was way stronger. So yes, that could always happen. I just think I'm looking at enough rotational weakness, not strength, but weakness in the Dow to say for the Dow to go 500 points, I don't see it. I think we used that up Friday. No, I don't think so. The question should be, could the Qs recycle to a brand new move to the upside without much of a pullback at all, which would include the semiconductors? And I would say to you that would take a cycling of the whole, the sectors would have to have some kind of a trigger to say that we've got a new focus for the next 6 weeks to 2 months. But I think it's the other way around. I think that they've got that focus. It's kind of in the tail end. It's in a little coda stage of the shorter term rally, and that we are more likely looking at a consolidation in the techs rather than a brand new move. After the consolidation, I'm prepared to look at that. So the answer is I don't think so. That's really forthwith. No, I don't think so. Next question I had was X. Could I look at X, which is U.S. Steel? The reason why we are not in steels at all, we lost that opportunity of getting back in for a nice gain. I just said, that's it. We've missed the buy the rumor, sell the news. That's all it is. So now you've got the reality of peak D in the month, in the weekly chart, leg E in the monthly. I've got a feeling that steel stocks are just going to take a well-deserved breather. They went up on basically in news. I don't think it's profits. It was news. The SLX is stuck in a range. I'm going to have patience, at least for subscribers. I don't think it's worth doing anything just yet. On the list, but nothing yet. Hope that helps. Now, another question I had was, yes, Basil, how did you get that 11:10 time frame today, Eastern time? When you said, what did I say? I said right here. So here it is. This is what I send my subscribers every day. Very detailed report on what we have, charts, analysis, etc., so that you're making a really informed decision. And what I'd said here is that this is the Dow. There's the Dow Daily, and the Dow Daily with the same chart, but with the technicals, the MACD stochastic. And what I'd said is this trend line is very strong resistance. The MACD was kind of good. The stochastic was really not. And I gave a whole series of different things, spoke about that particular candle we had yesterday. But what was really important is that within the context of what we're looking at, is I said, and at the end I always say, and today, and then I tell you what to expect. There's a fight between the cup formation, cup formation there, and the arch. I'd said that makes a plus 50s today at 11:10 a.m. Eastern Time, good action, while a mere plus 20s or worse, negative at that time, would suggest the week closes, the Dow falters again. So what happened is at 11:10, it hit 50, it was up 200, almost 200 points. It went to plus 50, then plus 48, plus 47, and then you saw that big sell-off. I'll be back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, folks, Steve comes right up. Comes Dave White. You've got Tom O'Brien, Andy Heck. Great program still to come. Amazon is down 4 at 1593, leg D. This is the thing that I'm looking at. There are so many leg Ds. It might be a process, but I think we're going to get into some kind of bumping into resistance this week, and we started to do that. Question I had here was, 2 questions. Could I look at Schwab, SCHW? So we've been long Schwab, and I say swing traders should take a little bit off right here. Nice gain, short-term gain, and then we have to make some decisions. So it's in leg D, made it extended a little today. I'm watching it closely. It must hold 55 to the whole 55's area. That's key support. If it closes under 55, it's a real problem. Weekly chart is still very strong. Technically, not so strong technically, but very strong price-wise. The question I had about, old G wants to know about IYT. IYT is the transports, the iShares, trading at 195.63, up 2.1. So I like this. It's in leg C. This is another area that might work out as we have a rotational. We could even have a rotational correction here. Some of the best are starting to pull back. Some of the worst start to improve. And that's really kind of what I'm looking at. So IYT, I do like, and you said that you had Federal Express. I mean FDX. FDX is actually acting very nicely. The weekly chart is not great, but just on a daily basis, at 251, I really think that it needs to get to leg C at 256, and I'm happy. So until then, I'm saying good action, but not great. It better hold 245 support over the next 2-3 days. So with that, just as we're about to wrap up, let me do a couple of things here. The VIX index trading at 15.86, really not doing very much. It's suggesting that sideways consolidation at worst, and at best, maybe it pulls back under 1586, goes to 1530s by the end of the day. I think it's going to be stuck in this area. I think there are a lot of stocks that just keep digesting, and that's what we're looking at. That's at least for my subscribers. That's kind of what we're looking at. So have a great day. I'll be back later on with Tom. The weather holds, and I don't lose my power. Have a great day. Stay tuned for Steve. I'll be back later, or I'll see you tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.